Imagine a world where nations aren't bound by the dominance of one currency, but turn to something ancient, timeless, and universally valued: gold. As global currencies face uncertainties, central banks are hoarding record amount of gold. Is this a sign of an impending economic revolution? Well, stay tuned because we are diving into this shiny metal that's rewriting the rules of global economics and geopolitics. Gold, the symbol of wealth, power, and security for centuries. In 2024, it's back in the spotlight like never before. Central banks have been stockpiling gold at a pace not seen in decades. Why? Because gold offers stability in an uncertain world. With over 1,000 metric tons added in 2023 alone, gold is reshaping the geopolitical and economic landscape. In today's video, we'll explore the historical significance of gold, why central banks are betting big on it, and what this means for the future of the global economy. Gold has been valued for its rarity and beauty for thousands of years. Long before it became the basis of modern monetary systems, civilizations used gold to craft coins and symbolize wealth and power. Egyptians associated gold with immortality and the divine. They called it the flesh of the gods and used it in both religious artifacts and trade. By the late 19th century, gold transformed from a commodity into a backbone of the global financial system. Nations began adopting the gold standard, linking their currency values directly to gold. A country's government set a fixed price for gold, guaranteeing that its currency could be exchanged for a specific amount of gold. For example, if a currency was pegged at $35 per ounce of gold, the central bank had to maintain enough gold reserves to cover the money in circulation. The UK became the first major economy to adopt the gold standard, ensuring that its currency was fully backed by gold. By the late 19th century, most major economies, Germany, the US, and France, had adopted the gold standard, creating a stable global trade network. Stable exchange rate facilitated international trade and investments. Inflation was kept in check as the money supply was limited by gold reserve. It restricted governments from printing money during crisis, leading to economic depressions. The gold standard began to falter during the early 20th century. Countries abandoned the gold standards to print money for wartime expenses, leading to inflation and economic instability. Nations struggled to maintain fixed exchange rates as gold reserves dwindled, leading to widespread abandonment of the system. Post-World War II, US emerged as a dominant economic power. The US dollar was pegged to gold as $35 per ounce, and the other currency were pegged to the dollar. In 1971, President Nixon ended the Bretton Woods system, serving dollar convertibility into gold. This move, known as the Nixon shock, was driven by depleting US gold reserves. The US was actually struggling to meet its obligations as countries like France began exchanging their dollars for gold. Then economic challenges, rising inflation, and the cost of the Vietnam War made the gold standard unsustainable. This marked the transition to fiat currencies, where money value is not backed by a physical commodity but by trust in government and central banks. Despite the shift to fiat currencies, gold continues to play a vital role in global economy. Central banks hold significant gold reserves as a hedge against currency instability. Gold often retains its value during economic crisis, making it a preferred investment during times of uncertainties. By understanding the historical journey of gold, we can better appreciate its resurgence in the 21st century as nations grapple with geopolitical and economic challenges. Central banks globally added a staggering 1,037 metric tons of gold in 2023, second to only record 1,082 metric tons in 2022. In the first half of 2024, they purchased an additional 483 metric tons, setting a new record. This surge is led by nations like China, India, and Russia, signaling a shift in economic strategy towards gold as a hedge against geopolitical and financial uncertainties. The United States tops the list with 8,133 metric tons of gold, valued at $628 billion. Fort Knox, the symbol of U.S. monetary strength, house a significant portion of this. Other major holders include Germany with 3,351 tons, Italy at 2,452 tons, and Russia at 2,336 tons. Notably, emerging economies like China and India are increasing their reserves, with China hoarding 2,264 tons and India 831 tons. With rising US-China tensions and uncertainties in global trade, countries are diversifying away from the dollar. Economic instability, inflation, rising debt levels, and currency devaluation have driven nations towards gold as a safe haven asset. Following the Bretton Woods Agreement in 1994, the US dollar became the backbone of the global financial system. Its peg to the gold as 35 per ounce, combined with US economic strength post-World War II, ensured its dominance. After 1971, when dollar was decoupled from gold, the petrodollar system took over. Oil exporting nations like Saudi Arabia agreed to pay oil exclusively in dollar in exchange for US military and economic support. This created perpetual demand for dollar globally. In 2024, dollar still accounts for 58% of global foreign exchange reserves, but this share has been steadily declining. In 2000, it was around 70%. US sanctions on countries like Russia and Iran have made other nations wary of relying too heavily on the dollar. Rising US national debt, currently at $36 trillion, undermines global confidence in dollar stability. Emerging economies, particularly in Asia, are diversifying their reserves away from the dollar. Gold is now being used as a counterweight to the dollar in an increasingly fragmented world economy. As of 2024, China holds 2,264 metric tons of gold, making it the sixth largest holder globally. However, experts believe its unofficial reserves may be much higher, as China has been discreetly acquiring gold for years. So why is China doing this? Well, there are some reasons. First, to reduce reliance on US dollar in global trade, and second, to bolster the yuan's credibility as a reserve currency. China's Belt and Road Initiative encourages partners countries to settle trade in yuan, indirectly backed by gold holding. Russia has heavily increased its gold reserves, now holding over 2,336 metric tons. Fifth largest globally. The 2022 sanctions imposed by the Western nations, which froze Russian dollar-dominated assets, accelerated its move to gold. By using gold, Russia shields its reserves from external interference and continuous international trade through alternative mechanisms. Emerging markets like India and Brazil are also increasing their gold reserves to protect themselves against currency uncertainties and rising inflation. China has been positioning the yuan as an alternative to dollar, particularly in Asia and Africa. By tying the yuan to its rising gold reserves, China enhances yuan appeal as a stable currency. The Shanghai Gold Exchange allows international buyers to settle gold trades in yuan, subtly encouraging its use as a trade currency. While a fully gold-backed yuan is unlikely, China's gold holdings provide psychological guarantee of stability, particularly as trade wars and sanctions continue. Gold offers unique advantage that fiat currencies like the dollar cannot match. First, neutrality. Unlike the dollar, gold is not controlled by any one country or central bank, making it immune to sanctions and political manipulation. Second, intrinsic value gold has held for thousands of years, providing a hedge against inflation and economic crisis. Third, liquidity. Gold is universally accepted, making it an excellent asset for international trade and payments. While a full return to the gold standard is unrealistic, some economists suggest a hybrid system where regional currencies, example BRICS currency, maybe in future, are partially backed by gold. This would combine the stability of a gold with flexibility of fiat money. Countries like China are experimenting with digital currencies, example the digital yuan. Integrating gold into these currencies could make them more attractive for global trade. Gold's resurgence is not just about economies, it's deeply tied to geopolitics. The US dollar has been a tool of influence for decades. The move towards gold by countries like China, Russia, and India is a direct challenge to its existing world order. As BRICS nations discuss creating a common currency, gold could serve as a stabilizing reserve to counterbalance the dollar. While unlikely, some economists speculate about partial return of gold-backed currencies. The appeal lies in gold's ability to anchor value, especially in the world of rising inflation. For nations like India and Turkey, gold reserves provide economic resilience against currencies, crisis, and external shocks. In 2024, gold prices hit $2,324 per ounce, just shy of an all-time high. This surge reflects its growing importance as financial and geopolitical asset. A survey by World Gold Council in 2024 revealed that 29% of central banks plan to increase their gold reserves in the next year, the highest proportion since 2018. Beyond currency, gold is critical for electronics and green technologies like solar panels. Its industrial demand further underscores its value. Retail and institutional investors are also turning to gold. In North America, 85% of professional investors now allocate some portfolio space to gold as a hedge against inflation and market uncertainties. Gold is more than just a shiny metal. It's a symbol of economic sovereignty. As central banks hoard record amount of gold, the global financial order is shifting. Whether this leads to a de-dollarized world or gold-backed future, one thing is certain. Gold's role in geopolitics and economics is far from getting over. So, what do you think? Is this just a temporary trend, or are we witnessing the dawn of a new golden era in global finance? Let us know in comments below. Don't forget to like, share, and subscribe for more deep dives into geopolitics and global economy. And by the way, remember, when paper money fades, gold shines. Stay curious and stay informed.